Good morning. It's Tuesday, October 31st, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's rally. You have December gold up $2, 2008. December silver unchanged, 23.39. December copper unchanged at 366. And January platinum up 6 at 946. So we saw a technical reversal in copper, platinum, and silver yesterday, while gold was unable to break out over Friday's highs. Friday's highs will remain as your key resistance point. We'll need to see a closing above that in order to attract more trend following traders into that market that are looking for more upside momentum. Now, Eurozone inflation fell more than expected at 2.9% overnight. And also the Bank of Japan, the yen fell the most in 2 months as the Bank of Japan only made minor adjustments to their policy settings. We saw Chinese factory PMI coming out at 49.5. They were expecting 50.2. It shows that their economy is still quite fragile and will need more additional support. So we want to keep an eye on copper, silver, and other markets that react to Chinese stimulus. Looking at some things to watch, nothing really in today's trading session other than the U.S. equities if they could sustain that rally from yesterday's short covering rally. But really we're looking forward to Wednesday's Fed meeting and also ADP. Now looking at the current trend for the gold market, it is bullish, and you do have your first real support 1984, that's the 200-day moving average. Your deep support's 1946, and then your trend reversal point's 1927. Friday's highs up at 1970, that's going to be your key level of resistance, so all eyes on that. Looking at the silver market, it is still in a neutral trend, but just barely. So your first support's going to be 23.19. Market right now, as of this recording, is 23.40. Below that, you're going to see a keynote level here at $23, and just above that, your first level of resistance going to be 23.40, where we're trading at right now. That's your trend reversal point that'll trigger things to a bullish trend, attract some of those momentum traders, those technical breakout traders, and then finally your 200-day moving average up at 23.89 is going to be your key level of resistance. Looking at the outside markets are mixed. You've got crude oil up 69 cents. Remember, crude oil yesterday down $3, so this is a big reversal back upside. It's been playing in a range for about the last 4 or 5 days. You look at the December dollar index down 15, 105.77. We'll keep an eye on that. That chart has been slowly sliding lower. I think that's what's providing a lot of your support to the gold market. And then finally, your treasury yields. You've got 4.82 down about 5 basis points on a 10-year note. So things are a bit easing off. I think it was the Eurozone data that came out weaker is what is got some of these inflation expectations for the U.S. kind of ratcheting down a bit. So that's what I think is giving a bit of a risk on trade and a little bit of a broad-based rally in some of these other commodities. If you have any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.